What if I told you the crypto market just experienced its worst sell-off since 2020? Bitcoin showing resilience at $77,000 while Ethereum crashes to two-year lows, bond markets in chaos, and the DOJ just dismantled its crypto enforcement team. This is Crypto Pulse, your essential 6-minute breakdown of everything happening right now in the markets. Hey crypto community, Alex here from Moonward Capital. If you're joining us for the first time, we deliver these Crypto Pulse updates twice daily to keep you ahead of the crowd. Today's update is absolutely critical, as we're seeing a perfect storm of market turmoil and regulatory shifts that could reshape the crypto landscape. Let's dive right into what's happening. Global markets are experiencing their worst sell-off since 2020, as Trump's 104% tariffs on China have officially taken effect. Bitcoin is showing remarkable resilience at $77,066, down just 2.16%, while Ethereum has crashed to $1,474, down 4.01%, and hitting a two-year low amid a massive liquidation cascade. Looking at the broader market, we're seeing most Layer 1 chains down 9.54%, while DeFi projects have been absolutely hammered, down over 20%. Bitcoin dominance has climbed to 43.8% as investors flee to relative safety, while Ethereum dominance has collapsed to just 5.7%, a multi-year low. But there's something even more concerning happening beneath the surface. The real trigger for this sell-off isn't just the tariffs, it's what's happening in the bond market. The 10-year U.S. Treasury yield has surged past 4.5% and the 30-year yield topped 5%, triggering what analysts are calling a basis trade unwind that's forcing leveraged investors to liquidate positions across all asset classes. This is particularly significant because it's spilling over from traditional markets into crypto in ways we haven't seen since 2022. The biggest casualty has been Ethereum, which plunged to $1,398 yesterday, its lowest level since early 2023. A major whale lost 67,500 ETH, that's $105 million, after their position was liquidated. Another whale with 57,000 ETH narrowly avoided liquidation by reducing their position. The ETH-BTC ratio has fallen to a multi-year low of 0.0191, reflecting severe weakness in the Ethereum ecosystem. But it's not all doom and gloom. In a stunning development, the Department of Justice has disbanded its national cryptocurrency enforcement team, ending what many called regulation by prosecution for exchanges, mixers, and wallets. Meanwhile, Hyperliquid Hype has defied the market trend with a 9.4% gain to $12.83, reaching a $4.31 billion market cap. The perpetual DEX now ranks #30 overall, showing remarkable strength during this market turbulence. Here's what you need to monitor over the next 48 hours. The $1,350, 1,400 ETH support zone is absolutely critical. Additional liquidations are clustered at this threshold. Bitcoin's key support at $74,500 must hold to prevent further market-wide declines. The 10-year Treasury yield. Any stabilization here could trigger a relief rally across all markets. The Senate vote tomorrow on Paul Atkins' confirmation as SEC chair, scheduled for 7 p.m. ET. This is exactly the kind of market volatility where having reliable, actionable intelligence makes all the difference. If you're finding value in these updates, make sure to hit subscribe and enable notifications so you never miss our twice-daily Crypto Pulse reports. Also, I'd love to hear your thoughts. Is this the bottom for Ethereum? Or will we see further liquidations if it breaks below $1,400 again? The ETH-BTC ratio is at multi-year lows, a sign of capitulation or just the beginning of more pain? Let me know in the comments below. That's all for this update. I'm Alex with Moonward Capital, and I'll see you in 12 hours with our next Crypto Pulse report. Until then, stay safe and trade smart.